Yo, okay, so this is the last video of this entire bootcamp and playlist. I will probably make another one, or not another one, but like probably like a part two or like a volume two, speaking about a few important things such as risk management, take profit and stop loss, and funding accounts, and what else? Probably like psychology maybe, and what am I missing? Funding accounts. Did I say that? I can't remember, but yeah, we'll see, whatever. So in this video, I'm going to be piecing together everything we've learned, and we're going to show you guys how to entry. What I want to do first is we'll go over to this week's price section, which is funny because this is like what I'd be doing in my weekly recaps. So if you just go back and watch my weekly recaps, you're going to see the same thing. And it's also more funnier because I've yet to do my weekly recap. So me doing this now will actually help me do my weekly recap. So that'd be nice. So this week we're just gonna like follow. I don't think London was good for this though. But if you see here, hourly just thingies, and then 10 a.m. was high of the day. So we wouldn't have caught that anyways, unless your SL is above this hourly bearish rally up. And then look at this hourly bearish rally up as well, and then another hourly bearish rally up. So yeah, let's just get into Tuesday London session. We trade London session. Obviously, this strategy does work in New York as well. So the best times the strategy works is 8:30 and 3 p.m. That is 30 minutes after each open. So that is like the best time the strategy works. So you'd see 8:30 and 3 p.m. UK time is the best strategy. I mean, the best timing um, for me personally. So if you're looking on Tuesday now, let's find out. It's funny because this is what I'll be doing in my weekly recaps. So if you want to watch me do more weekly recaps and just break down price, is literally what I do. So the 4 hour is bearish here. As you can see, we have break structure in the 4 hour, and then literally from that same candle we break structure again hourly. Then we dump more, and then London session opens. This is quite evidently proof. We are bearish on both time frames. Therefore, this means we are using the continuation model. You may ask, what is the continuation model? It means when the 4 hour and the 1 hour align in the same direction, and in this case, the fair value ups are respecting perfectly, we do not need a liquidity sweep. So usually you'd mark out liquidity. In this case, we are using just the 5 minute. So what you would do is you would hop into here, mark out this 5 minute bearish rally up. On the first, you would mark out any breaker structure. So you obviously you would mark out highs and lows, but then what deems the continuation model actually usable is a 5 minute breaker structure. And if we do break structure on open, that is more than enough if we're both synced on higher time frame bias. So in this case, we are synced on the 4 and the 1 hour bearish, and we broke structure. Next thing we need to look for is a 5 minute bearish rally up, which is right here at 8:20. And then another thing we've got to do is mark out 8:30, which is our cutoff time of trading. So that's fine. We can go back and see when was this. This is when we actually tap into the fair value up. And then one thing we also need as well is equilibrium. And guess what? I would consider that as an equilibrium, which is fine. So as soon as it gets taps equilibrium, respects this 5 minute fair value up, what you would do is, I don't really talk about like the trades you would take necessarily in my weekly recaps, but if it's like an A-star setup, I probably do. But yeah, you just take this SL above where your equilibrium would have been, and yeah, this runs like 5 even to lower the day. But if you're doing a continuation model, I would just simply go for like a 1 to 2. Very humble continuation model, perfect. Now let's go on to the next day because I'm not sure what the next day did. I'm just seeing the hourly. Ooh, I think that was Tuesday. This is Wednesday. That was Monday. So on Wednesday, sorry. This is Wednesday. London session open. First, you got to mark it out, and then I feel like I'm going crazy because I feel like I'm seeing the same stuff over and over again, and eventually you will just see that. So again, go into the 4-hour. Where is the nearest breaker structure? It is actually right here. Still the same one. And whenever you, obviously, when you're day trading, you have to understand a breaker structure is what? It's just a shift in the market structure. So a lot of the times, you will be trading like with that same 4-hour structure, and the 1 hour was there flipping up and down, but the 4 hour is still staying the same within the week, which is fine. You will experience that a lot, especially with high time frame uh, bias. bias. But so the 4 hour is bearish. Is it? Let me just check. Yeah, because this closes at 11. So do we go into hourly nearest break of structure? Is this a breaker structure? Nope. Is yes, this looks like a breaker structure. No, that's not a low. See, simple mistakes. Okay, so we broke structure upside here on the hourly. That's fine. Not only that, we broke structure upside, and then we manipulate it down into what? Nice cheeky little fair value ups. Not only that, we also tapped into what? What's this? A sweep, and then a break of what? Sweep of this low. Disgusting sweep, I know. And then a break of what? This high. What's that? An order block. Not only that, we also have, again, discount, equilibrium, whatever you want to call it. Boom. So in this case, it is not a continuation model because the 4 hours bearish, the 1 hour is bullish. And what does this mean? This means, like I said in the last video, the 4 hours bearish, 1 hour is bullish, and the 4 hours bearish. So this is the 4 hour, and this is the 1 hour, and this is the 4 hour. So this 1 hour move, you can see what it did. And actually, this week is actually pretty clean, and I'm glad I'm doing it this week because you can see that happen right here. And then we even have a breaker structure to the upside, where on Wednesday and then Thursday we create high of the week, probably inducing buyers with this breaker structure. This would be a fake breaker structure, and we come back down for this low. Why is it a fake breaker structure? Because you break structure even though we respected all of these fair value gaps, especially these order blocks, and then we probably even had like more fair value gaps getting respected, like here for example, but like nothing much in the daily, but higher time frame, like this one, probably not hourly. All of these hourly getting respected. I saw I seen something here earlier on the week. Am I tweaking? But either way, whenever you have a big failure up like this, you have to wait for it to get respected anyways, or you're gonna wait for the order block to get tapped anyways. That's something I talk about as well in my YouTube videos, and that is just high the week. And this is a really big forward candle, and all it did is tap the order block, and then that's high the week. Simple as. But let's not get too carried away. Let's talk about the strategy. And this is not a weekly recap. I'll do that after this. London session. As you can see, we are mixed bias, even though hourly is bullish, forward is bearish. We're leaning towards buys because this hourly fair value gaps got respected. Yes, we know that the forward is bearish for higher time frame, higher power, but we have good draws here. We have a 15-minute order blocking respected. We have a discount level and whatnot. So what you would do prior to London Open, you would mark out liquidity. So you'd mark out this low, you'd mark out obviously highs as well. You would mark out. One thing I want to say is this would have been a very good trade at 9 because, and this is a pro tip actually. I'm glad this is here. Where's that? Where's that? Where's that? I can remove all of this stuff now, but you can see the stuff. It just creates like a storyline, I would say like a story, like a path or like order flow. What is price doing? It creates a story. And when you look at the high time frame, it just helps quite a lot. Okay, so the reason why this is important is because, of course, we marked out 50-minute liquidities before market open, which was before market open. It was here. So before here, so if I'd like do this, the 50-minute liquidities you have would have been like, oh, okay, this high, this low. That's pretty much it. And okay, let's see what else. Okay, these two highs here, and then low wise we had this low, You're like, alright, cool. Let's wait for market open. You'd wait for market open, and you'd be like, alright, cool. We swept this liquidity. Let's wait for a break structure and a fair value up. Alright, cool. We actually swept liquidity within the first 20 minutes. Boom, broke structure. Boom, fair value up. And yeah, we actually came pretty low, but we reversed. The trade which I preferred way more because of my bias is this. And I think this is very important because a lot of people got tripped up this day. It is on the 15-minute. After this low gets placed, boom, we have a new low here. Then 9 a.m. opens, and then we have a 15-minute liquidity sweep. Then we have a beautiful break structure right here, and then we have a fair value gap. And it's a beautiful fair value up. Even if you miss that fair value up, and let's say whatever price issue comes way back up here within like no time, and then we just respect this fair value up here. Even if you take it off this stop loss below the sweep, even you're still getting 2 RR at least. So I would say average RR for this strategy is 2, with like a 70-60% win rate. In my experience, I've had like a 90% win rate. If you're doing this strategy with a 1-to-1, like a one risk and 1 to make 1, then your win rate could go up exponentially to like 90% because you're just trading like off of sweeps or continuations, and they like in your favor. And if you catch a good entry, all it depends is on your stop loss, and then you can catch one quick move 1-to-1 and make your money. And that is why your win rate could go up to 90%. I think we'll do one more live one. I mean, not live one more of the week, and then we can hop into FX replay. Where we at? Learner session. I don't think this learner session is good when it comes to actually this strategy, but we'll see again. So at this point, it is actually good, quite to be fair. On the 4-hour, we are bullish, right? Yeah, cool. We're bullish on the 4-hour. On the hourly, we are bullish. Why? Nearest breaker structures here. But I would not be bullish, even though we're bullish in the both time frames. You might be thinking, why? Because this got respected beautifully. And obviously, you're like, oh, okay, well, this hindsight, sure. That's a good point. But on the 4-hour, at this point, we're still in this fair value up. Not only that, we've disrespected this 4-hour bullish fair value up. And whenever you disrespect the 4-hour bullish fair value up, that means you're bearish. Simple as. It doesn't mean that you're like hella bearish, but that means you're kind of bearish. So that's how that's how I was talking about this being a FBOS, which is a fake breaker structure, where we break structure here and we go up a tiny bit and then we straight come back down for this low. And I think that would have been probably, oh sorry, this low in fact, that would have been the best trade this entire week. So if I just go into like the 15-minute, wow, you can literally see like 550 points with no drawdown. These are the moves you want to catch, and that's what's possible with this strategy. And yeah, so again, 4 hours bullish, 1 hour's bullish. I would say the 4-hour is bearish purely because we're still respecting this bearish rally up and this bearish rally up. On the hourly now, I would not even consider obviously this breaker structure because it's not a break. This is the nearest break. That is actually 9 a.m. So I don't know why I was yapping. So the hourly is bearish, 4 is bullish. The 4 is just retracing up. So instead of it being like this and this being the hourly, it is now this, which is interesting. Like the up move is the 4-hour pushing up, and then the hourly is the hourly pushing down. So you just get a break structure here on the hourly, and then let's put my phone on silent. Okay, quick. There we go. And then yeah, so if you were to mark out London session and then just mark out highs and lows. We'll see what happens. I don't want to show. Let's just remove everything. I like to keep it clean. So now we know the hourly is bearish and the 4-hourly is bullish. I am looking for sells. What you do, you mark out highs and lows. If I just go into the 15-minute time frame, mark out every single liquidity you see because it is a mixed bias trade. Every single one. Oh, not every single one, but like, sell side liquidity, Bing, push, yep. Can't I actually call this buy up? But we don't talk about that. And so yeah. Next things next. Market opens, we accumulate 830. Also, this sweep here, this is actually the trade that I caught. It's just a 15-minute liquidity sweep alongside this 15-minute inverse. For me, this was bullish trade because don't get me wrong, this still held because the forward was bullish. That's why it's 15-minute held. But this was a retracement slash sweep, and then also this was this hourly break structure holding as a fake break structure because you break structure and then we come up and we just resweep again. So I feel like we've been seeing a lot of fake break structures recently, especially like this year and the last year, which is fine because, like I've mentioned, what you really want to get your bias from is not really from the breaker structures unless it's like a continuation model. What you want to get your bias from is from respecting confluences such as order blocks and fair value gaps. That's one of the biggest things that increased my win rate with this strategy. Because if you're training purely off breaker structures, stuff like this will happen all the time, and it's stuff like you need to keep an eye out for. That's the only thing. So literally, you wait for market to sweep it, and if you have our 930 cutoff mark, which is right here, boom, swept liquidity. Let me get rid of these yellow lines because these obviously got ran past. This one held and that one didn't hold. That's a breaker structure. I'll keep that there. Sure, why not? Swept a liquidity here. We wait for a breaker structure, which is right here. We wait for our fair value gap. This variable tap, nope. Variable tap, nope. But you got a variable here, so it is what it is. But here you want to really catch this trade, which is again fine. We did have a liquidity sweep and a breaker structure, and then we just accumulated until the new flower opened, and then boom, retapped this point of control, and we just dumped, tapping fairly up along the way, and then yeah, New York session opens, gives a little retracement, 3 p.m. perfectly dumps. So yeah, not really a trade that you could have caught there, except for the buy up, I guess. I still think it's clean, because that is high the day, high the week, and yeah. But that is literally like the last week's price action using this strategy and nothing else, and you could have caught like high the week with it. And I think it makes sense why like it works, and it makes sense why it turned me profitable because you can read the markets using this strategy, and then once you start adding other stuff, that's when things become more advanced. So what I want to do now is I want to hop onto FX replay, and this is what I want you guys to do is obviously once you've got a strategy, you instead of going and hopping into the live markets, you want to hop into FX replay. And FX replay is basically a back testing software. You can go back in time, click play, and see what works. So let's just find out. If we go into FX replays, Kevin. Pair is going to be German, of course. And then, oh, random it is. And so I can low-key close this. And for the rest of this video, we are just going to be doing probably like 1 or 2 back tests. We've gone over liquidity sweep. Continuation, and we've gone over a sweep. So hopefully we see a few more setups here, and then we can call it a day. Me personally, before I would say you're even comfortable with this whole strategy, you have to at least backtest it 50 times, at least 30 times. I think 30 times get like a small sample size. If you want a proper sample size, I would say 50 to 100 times. I know that might seem like a lot. It does get boring, but that's guess what? Trading is boring, guys. It's very boring. Um, so yeah, let's just see. You realize how boring it is with this backtesting. I'll probably do two or three. We'll see if we hit anything. So this is, I don't know what date this is, 2020. So we go to the 4 hour. Where's the nearest breaker structure? Right here. Well, we're going to the hourly. Where is the nearest breaker structure? Right here. Okay, cool. We are bearish on both time frames. Let me just go 1 hour ahead. Cool. That's London session opened. Cool. Are we still bearish? Yes. Are we still? Yes. So we're bearish on all time frames. What do we do? London session open, mark out highs. This is a high. I'm not going to mark this a high, but this is a high. And this is a high. And this is a high. So let's just go higher time frame, see what's going on. We booked structure here. We respected this fair value gap, which is nice. After breaking structure, we came here, respect this fair gap, came big down, and then we have this 4 hour bullish fair value gap again respected, which is interesting. Why would I consider this respected? Because this closes here and this one closes here. So you're telling me this candle teleport from here to here. So in my eyes, it closed in the middle, which is fine. That's just something you see in my videos again. It's just things you see over time. So even though we're bearish on both time frames, what I will do, just because I want to, is I will mark out liquidity on both sides, even though it's down here. So now we've got that all marked out. I'm gonna hop into the 5 and watch out for 5-minute breaker structure below this low because we are bearish on both time frames. What does that mean? It means the continuation model comes into play. So let's just see what happens. Let me just skip the first 5 minutes because it's going to be accumulation or manipulation anyways. And yeah, so let's just see. We come up, we sweep a higher 803. It's very early on, which is fine. So we can still monitor this low for a breaker structure. And this low now gets brought down to here as well, so that's fine. And then I'll monitor this on the 1 minute for a breaker structure, make a new low. Nope, nope, yep, that's a new low. That's a fair value gap, but we haven't broke structure yet. Again, we haven't broke structure yet. Now I would say we've broken structure. So if I go on to the 5 minute, this could also be a 5 minute break structure in 2 minutes. We broke structure. What we wait for? We wait for a fair value up. Simple as. Now we did also have this value up here. It already got tapped. Now we have this value up here. It's fine. Let's just see what happens. Got dump. Retracement. Okay, nice. Taps the fair value up. Nice. Okay, big. This is why we wait for reactions. That's nice. Comes up and resweeps it. Okay, cool. We also did break structure in the 5 minute. So I am still looking for that continuation move. So let's see what happens. This is also a new sweep. I would consider it like a new sweep because it just reswept it. Like it didn't run past this liquidity, it just came up and reswept it again. That's fine. Again, we stay looking for them same confluences. Break structure fair value gap. We're gonna mark out cutoff line here, 930. We have a new low here that we're watching out for break structure. It gets very repetitive though, and you'll see why, because the most recent low would be here, not here. And then you also got reset and higher time frames, which is also something you gotta do. For me here, it's looking like it's bullish purely because the way the hourly is moving, the hourly got respected, the 4 hour got respected, and this 15-minute inverse just got respected. To me, this just looks like it's going up. So we'll see what happens. We are yet to break structure. We broke structure here. Okay, cool. Now if we wait for a failure up. Okay, cool. Tap the failure up, go bearish candle close out. This is very risky, but I'm gonna go for it just because I just want to see what happens. That's way too wide, but let's just move it here, and then let's stop loss. I would put at a 1, 2, 2, like I said earlier. So in this case, we are bearish on a lot of time frames. We book structure here on the 5-minute. After we book structure on the 5-minute, we tapped equilibrium here, and then kind of closed bearish, near the kind of closed out of it, broke past this low, and then I'm gonna put my stop loss above this high. Hopefully that is a strong high. I'm gonna see what happens. Um, I found it. There you go. I'm very interested to see what happens because like I said, I was seeing bullishness. Wait, did it stop me out? Surely. There we go. Hello? Oh, it's never entered. Damn. Okay, cool. Okay, cool. Fair enough. That's cool. Okay, but we have to continue. Damn, we have to continue. But like I said, I had to enter just purely because of thingy, but I did say I was going to go up because if it's respected, it's respected. Let's go to the next day because, yeah. I feel like this is not fair though because I kind of know like how price moves for the last 10 years. This is just like cheating. Trust me, I've done this a lot. I do this for fun. 5, 4, 5, 6, 7. That's 8. But I do want to catch a good trade during backtesting though, like without hindsight, so I can show it to you guys it works. So the 4-hour bullish, I'll probably catch two more, but I would probably count that as a loss because yeah, it just didn't tap me in. 4 hours bullish, and the hourly is hourly's bullish, 4 hours bullish, so that's nice. First thing you gotta do is just see we had all-time highs probably. That's cool. What do we wait for? We have a 5-minute break structure above this high. Let's click play. 1, 2, 3, 4, 5. 5-minute break structure. Perfect. What does that mean? That means continuation model is in play. So equilibrium is getting pulled out as soon as you see a retracement. I also want to see if this fair value up gets tapped, because that is a fair value up. That's going to close in 1 minute. So let's see that. Okay, there we go. Perfect. So 5-minute broke structure. We could also just wait for 5-minute fair value up, 5-minute equilibrium. You can't just wait for an equilibrium, but me personally, I like the 5-minute fair value up. Okay, that is a nice retracement. Again, good retracement. It's coming for the 5-minute failure up, tapped it nicely. Good reaction. Very good reaction at 820. I am gonna have to be taking this. Stop loss, where would the stop loss be? Below the equilibrium. And then again, target at 1 to 2. What you can do here is just, I'm gonna wait for one more candle. Okay, well, it's the exact same. Just for that, order, I'm gonna make sure it's market. Wait, what? Order, place, limit. No, market, please. Target, risk amount, $100, and targeting 2K. Yeah, sure. Boom, done. I'm in this trade. Now let's see how this continuation model plays out. That's interesting because it runs 1.5. Should I go break even? You could do in this situation. I'm gonna just watch it play out. Oops, what just happened? Came very close to SL here. The fact it's accumulating this much, I feel like it's gonna hit SL. But just for that, I'm gonna cut my stop loss short to here. Okay, that's TP hit. So that's our 1 to 2 RR. Simple continuation model. Why was it like so off? Like, why am I getting spreads and backtesting? Okay, so that's a 2 RR. Again, let's say I lost the other trade. I won this trade. I'm still up 1 RR. So it makes sense. I will do one more for you guys. And like I said, like it's cheating for me. So what I will do is just spam forward a few days. So I can't copy the bias from the last previous days. So discussing previous break structure on the 4-hour is right here. Correct. Previous break structure is here. On the hourly, previous break structure. Wait, I don't even got market open marked out. That's funny. Okay, I just skipped market open. So we're going to the next day. Also, this is getting quite long, so I will call this the last one. Whether it's a win or loss, I don't really care. But yeah, no, this strategy does work. I don't think, well, no one can tell me it doesn't work. I've got plenty of data on it. I'll explain it later on. Let me just do this last trade, see what happens. Hopefully it wins, so then we are up. So we have a breaker structure here, not really because it's kind of still moving. So the previous breaker structure is still bearish. But you have to again take into consideration that this candle is not closed yet and it's going to close above here. Do you understand? And the hourly previous breaker structure is here. Hourly is bullish as heck. Why? Because it's looking nice on the 30-minute, resurrecting structure, whatnot. But 1 minute candle on the open is big. And if you were to consider this forward bullish failure, forward break, I would even go as far to say a continuation model. But we're going to skip 5 minutes because the first 5 minutes are useless anyways. And we broke structure, hello, that's fine. Again, let's just go into the 15 and just mark out liquidity. Boom. Boom. It did get swept out open. So I'm just going to leave that on there. Leave that on there. There's also a low here, like 745 I'm guessing. Yep. And then there's also a low here. So now that I've marked out all the liquidities, that's a disgusting make. We can watch this reaction. So because the 1 hour was bullish, that's a good reaction after that. The fall is still bearish, you'll keep that in mind. So this is a mixed bias trade again. So again, it's going to be probably choppy. I know people, certain people who don't even trade when it's a mixed bias, because it's, I won't say it's relatively harder, but you can see how much harder it is when the 4 hour and the 1 hour do not align. It's a lot harder to see where the market's going, and the best trades come when you have a clear draw on liquidity and a clear bias. So I know people who trade like purely for 1 hour, and it requires a lot of discipline. Yeah, you might only get like 1 trade a week or like 2 trade a weeks max, but it's just that having that sense of uh, conviction that you know, like, oh, I know what the market's gonna do. So yeah, let's just check out this sweep. Okay, good sweep, good reaction, good break, and then good failure restriction here. We just broke structure now though. There it is. And now we are tapping into this inverse here. And we tapped into that one. Okay, cool. Resweep, sure. So we have to, whenever we resweep liquidity, we have to look for another break structure. We also fill in this hourly bullish failure. That's fine. First things first, we also got to mark our 930. If you don't get a trade, that's fine. Why can't I move this? Okay, there we go. Where's the break? I just seen it. It's right here. And we've left behind nice fair value gaps here and here. There we go. Okay, we came down, tapped into this. Okay. Is there anything here on the 3 minute? It kind of is. Interesting. I do like this sweep. And I do like this reaction on the high time frame. On the 30 minute as well. This just looks like a weak low getting swept. And the 4 hour being bullish and the 1 hour being bullish. Even the 4 hour bearish was here. I think this is going to be the next break of structure within this 4 hour close, meaning once 11 a.m. hits, the shift would already happen, but by then probably price would be up here. That's the plan, right? So let's see how that goes. I might just take this trade. Stop loss again below the liquidity. TP, let's aim for 1 to 2. Order. I don't know if I'm in or not. Like, how do I check? What did it say? What did it say? What did it say? No, I want to market this, please. Save. Now we're just gonna go into the timer and see what happens. Okay, that's amazing. Oh wow. Wait, why am I getting spread on? Okay, whatever. But you can see if you targeted the next drawn liquidity, which would have been here or here, TP would have been hit. And that's what you meant to do. You know, you meant to go for 1 to 2 is you meant to target the next drawn liquidity, which is fine. But you get the whole gist of it. That's pretty much the strategy. I've shown you many examples. I've even backtested like 3 examples for you there. That's not enough. But that's fun. So yeah, what I want you guys to do is, if you guys want like 10 free backtested trades from this strategy, you can join the Discord down below. I will also be helping like new traders out if you guys want help. Any questions? It's a free Discord, and yeah, that's pretty much it.